What's up, everybody? It is Wednesday, March 29th, and the NASDAQ is officially in a bull market. I just saw those headlines pop up a little while ago, and I just find them to be funny. I just find them to be hilarious because, you know, this is the kind of information that constantly gets put out there. You know, the market's down 20%, it's a bear market. So what about the people who sold back in, October, November, December, when the NASDAQ was, according to them, it was in a bear market, and now today they're announcing, they're trumpeting that the NASDAQ is in a bull market. This is the problem with the kind of investment advice, if you want to call it that, that you get from like the mainstream media and most of Wall Street, to be honest with you. Now, I told you guys even before the October, when we saw the turn in the fiscal flows, and I pointed that out. I was already, prior to that, I was telling you that February 15th of 2023 would be a peak in the fiscal flows and we would have a correction. And I was basically just a couple of days off. And we did. That February 23rd was a peak in the fiscal flows. And then we would be heading into a period of tax drain. The March tax drain was relatively benign. We're going to get the April tax drain coming up in another, 2 weeks or something. So that will have a negative effect. So I've been, spotting these, or not spotting, but I've been telling you about these periods during the year when there's seasonality, when there are seasonal trends based on, fiscal developments, and a lot of it has to do with taxation and then the recovery from taxation. And I've said before that the tax drains that we get periodically, like the one that's coming up in April, I mean, they create a lot of turbulence in the market, that's for sure, because you're draining out hundreds of billions of dollars, and that just leaves the market with much less purchasing power. But the bigger picture that I try to explain to you guys is in the overall, because the government, not just that it's running deficits, I mean it's running large deficits right now. Well, we still have 5-6 months left in the fiscal year. We're already up to $1 trillion deficit. I mean, we're talking about numbers, and I've been over this many times already. We're talking about numbers that, we saw higher numbers during the pandemic, but even as these numbers were scaled back. And that's another thing I told you guys. I said at the end of, you can go back and watch my videos around December 2021, when I said in the beginning of 2022, we're going to have a major contraction in fiscal support, and that was going to end up causing a slowdown in the economy, and you're going to have a negative reaction in the stock market. See, a lot of people think the stock market leads the economy. It's actually the other way around. When the economy is growing, corporate profits tend to grow, the stock market advances. The only discussion really is at what rate is the economy growing, and that would also determine the rate of advance of the stock market, and it would also maybe reflect differently on certain sectors. I mean, if you have fiscal policy that favors a particular sector, that sector is going to benefit. If you have big payments into health care because of Medicare and Medicaid and disability and stuff like that, I mean, the health insurance companies and health care providers, that area is going to benefit. If you have, Biden saying now we're going to get $890 billion for the defense budget, you're going to have defense stocks that benefit. But in general, it's like the old saying, a rising tide floats all boats. And I said this, back in October, that the fiscal contraction of 2022, which, by the way, gave us 2 quarters of negative economic growth, the first 2 quarters of 2022, I said that that would eventually plateau out. It eventually will stabilize at some level, and then we'll start to see the fiscal expansion or the fiscal growth return. And that's exactly what happened. And I gave you the exact turning point, which was in October. And it doesn't only pertain to stocks in terms of what trends were affected. I mean, we had a turn in the gold market. Oil is still a little bit under pressure, but I've noticed in the last 2 weeks that oil producers have become net long futures, and we haven't seen that, going back to basically last October 2022, and they were net long then from a much higher net long position. They were actually liquidating longs, but I mean, now they're adding to their long position, so I suspect that we're going to see oil go up. We had a very nice, in the EIA weekly petroleum status report today, there was like a 7.5 million draw in crude. There was something like a 3 million draw in gasoline. There was a slight increase in distillate inventory, but gasoline's down year over year. Distillate's down year over year. Crude's still up pretty big year over year, but demand is coming back. We had good demand for gasoline, and exports are still very, very strong. So I'm not worried about the oil price from a bearish perspective. I think, we've done about all we're going to do on the downside. Now, there's a couple of caveats. Just again, let me mention today that it was put out there, trumpeted out there that, NASDAQ's in a bull market now, folks. Okay, so I don't know, for those of you who sit back and you wait for these pronouncements, I mean, how much later to the game? Number one, how much later to the game do you want to get? Number two, why don't you want to understand something? Why don't you want to be ahead of the crowd as opposed to being with the crowd? I mean, to me, it's not like this is not some kind of Einsteinian endeavor that we're doing here. These numbers, and by the way, my course, my video course, Understanding the Daily Treasury Statement, it explains, how you can kind of calculate or follow these things. It's very easy to parse through the data and just, have an understanding of the basic trend of what is happening. Again, is the swimming pool filling up or is the swimming pool going down? And I mean, that really should be your major concern. I mean, more than anything else. You might want to get a little fancy with these quarterly tax drains and maybe want to play them as a trader, getting a short position on when they come up. But I mean, for the big picture, I mean, the way I like to look at it is that when these things happen, I use these corrections to add to my portfolio. Right now, I'm fully invested, so I don't have a lot of really no investable cash available at the moment. But if I did, I would definitely use it as an opportunity to add. I mean, that's how you build wealth. I mean, if you have the ability to take advantage of these dips when you know they're coming and to understand, what's happening as opposed to getting caught up in all the panic and the hysteria, I mean, you're gonna be so far ahead of the game that it's not even going to be funny. I mean, it's really it's an amazing wealth building machine, the stock market, if you understand it. If you understand some basic economics, to the extent like how I explain it, you're going to be fine. You're going to be fine. So yeah, and as I mentioned in the last couple of videos, we now have a situation where the futures markets are saying that Fed is on hold for the next 2 meetings. Okay, so that's is it a June meeting and I forget, April meeting and June? No, whatever. The next 2 meetings, and then May and July, and then August, September, November, and December, 4 rate cuts of 25 basis points each. So according to the market right now, which we know Jerome Powell is like a slave to the market. He follows the market religiously. So whatever the market, I mean, I don't even understand really at this point why we have a Fed, at least in terms of setting monetary policy. And sometimes I wonder why we have a Fed anyway that engages in policy which creates such disequilibrium and such so many problems that they literally have to invent new facilities to fix the problems that they create through their own policies. So, I mean, I think Powell's going to go down as one of the worst Fed chairs, but that's a whole other discussion, and it's not important if you understand what's going on. So I think the outlook looks positive, but it's funny now that we get the headline about the bull market, because that could very well be like, just a short-term contrarian signal, because of course they're not looking at the tax strain that's coming up in 2 weeks, and that's going to have a negative effect. And of course they're not looking at the debt ceiling, and I keep coming back to that. I'm going to be stating this in every single one of my videos going forward until June, because that could be, I got something going on with my lights here, that could be a real issue. Again, the debt ceiling needs to be raised or suspended. If not, we go into some kind of semi-austerity situation, and that will create a recession. That will be the recession. Remember that everybody said 100% certain. I was the only one that said there's not going to be a recession. But I have been qualifying that by saying, look, if they don't do something about the debt ceiling, then that's going to be a big problem. And we got until June for that to be figured out. I don't hear anything from either side that sounds encouraging, but this is the way they play the game. It's always brinkmanship. They wait to the 11th hour. That at least has been the pattern. That's been the history, and hopefully, and I do believe that's how it will resolve, but you never know. But we still have a little bit of time. So that's it for today, folks. I hope you had a great day. Market was up. See you tomorrow. Bye.